Imagine waking up one morning and suddenly the price of your favorite smartphone drops, but your luxury watch costs a fortune. Sounds like a plot twist. Welcome to the new reality, GST 2.0, India's biggest tax reform in 8 years, effective from 22nd September 2025. But why did the government completely rewrite the GST rulebook after almost a decade? What does it mean for businesses, for students like you, and for the everyday middle class consumer? Let's break it down thrillingly, practically, and yes, with real market insight. So, GST 2.0 isn't just a tax revision, it's a revamp of India's consumption DNA. After 8 years of complex returns and confusing slab rates, the new GST aims to simplify compliances and boost spending. However, the previous tax slabs were only structured through the past undivided indirect taxes like VAT, excise, entertainment tax, etc. The tax percentage were not checked properly while preparing GST. So now they have changed the tax slabs after 8 years. A completely revised tax slab structure, fewer classifications, and a clearer distinction between essentials and luxuries. Here's where it gets interesting under GST 2.0. Household essentials and mid range electronic become cheaper. Even EVs and budget cars can get a tax break to boost green mobility. Restaurants catering to middle class consumers, big winners. More football, more affordability. But there's always a flip side. Luxury automobiles, high end gadgets, and designer fashion will now attract higher GST. It's the government's clear message. India will reward practical consumption, not indulgent luxury. For the middle class, this is relief wrapped in opportunity. Prices of daily goods drop, but there's a hidden strategy behind it. The government wants you to spend more and save less to boost demand and production. In fact, companies in the automobile and consumer goods sector have already started realigning prices. Expect festive offers, new car launches, and aggressive marketing campaigns in the next few months. As you can see right now, in the wedding season, Diwali season, and festive season, there was a huge spike, huge hike in purchases of consumers. For India's 1 crore plus MSMEs, GST 2.0 is more than just tax relief, it's survival insurance. Fewer classification headaches, easier ITC claims, lower compliances burdens means higher profits. Businesses can now spend more time scaling and less time filing forms. Big companies are also reshaping their pricing and tax strategies. So expect smarter invoicing, automation in compliances, and yes, maybe even a few new job openings in taxation and finance. Let's go sector by sector. Automobile industry, GST cut means demand spike, especially for EVs. Household goods, cheaper essentials, mean higher sales volumes. Luxury and fashion, facing slower growth, pushing brands to go premium but practical. So, in short, in the market, it is shifting from show off spending to smart spending. You might be thinking, why should a commerce student or a young entrepreneur care about GST 2.0? Because taxation isn't just a policy, it's the foundation of business decisions. When you start your own business, how you price your product, how you claim input tax credit, how you manage margins, all depends on understanding GST. So, this reform is a live example of how government policies shape market behavior, and that's exactly what makes studying commerce powerful. GST 2.0 isn't just about simplifying taxes, it's about redefining India's economic mindset. The government's clear message: spend smart, grow fast, and formalize the economy. With global investors eyeing India's consumption boom and local businesses getting a compliance breather, the next 3 years could see a wave of economic expansion. So, next time you buy a new mobile phone or dine out with friends, remember you are a part of India's new economic engine. GST 2.0 is not just a tax reform, it's a mindset shift. Subscribe for more updates on India's economic revolution. Thank you so much.